Good morning, everyone. It's Marshall Giller bringing you the morning comment for September 2nd. The dollar started off the new month moving higher against most of the currencies we track, both the G10 and emerging markets. The fact that the rally came without any news from the U.S. market, which was closed for a holiday, shows the underlying strength of sentiment for the U.S. currency. Japanese stocks rose sharply, and dollar-yen, as usual, moved higher in tandem on reports that Prime Minister Abe will appoint a pro-reform ally to head the health ministry, which oversees the nation's enormous government pension investment fund. The person who's been nominated wants the GPIF to reduce its reliance on JGBs and invest more in stocks and overseas assets. That would cause a tremendous outflow of capital from Japan. This is yet another reason why I expect dollar-yen to continue to move higher. In emerging market currencies, the ruble was the worst performing EM currency that we follow, owing no doubt to the worsening crisis in Ukraine and the threat of further sanctions later this week. In contrast to the weak ruble, the Hungarian florin and the Polish zloty were the best performing EM currencies we track, even managing to gain a little bit against the dollar. That's probably because the Swiss National Bank President Thomas Jordan renewed his pledge to maintain the Euro-Swiss floor. Hungary and Poland have a lot of debt denominated in Swiss francs, and any strengthening of the Swissy would cause them a lot of trouble. Jordan's pledge suggests that buying Euro-Swiss at levels close to 120 the figure, like now, could be a low-risk, long-term trade, although investors would certainly have to be very patient. The RBA kept its cash rate target unchanged, as was unanimously expected in the investment community. The monthly statement was marginally more optimistic. For the FX market, though, the significant point was that the RBA ratcheted up its protest against the high level of the currency by pointing out that the Australian dollar, quote, remains above most estimates of its fundamental value, unquote, which is certainly true. There was some surprising action in the Aussie today. It fell sharply 10 minutes before the day's building approvals figure came out, and then failed to rebound when the indicator came in higher than expected. That suggests to me a lot of negative sentiment towards the currency. Adding on the RBA's protest against the strong Australian dollar, I expect the decline in Aussie dollar to continue. As for today's indicators, during the European day, we get the Eurozone PPI for July, which is expected to fall at a faster pace. That may add to worries about low inflationary pressures 2 days ahead of the ECB meeting and be euro negative. From the UK, construction PMI for August is coming out, and the forecast is for the figure to decrease slightly, a potentially negative event for sterling. In the US, the ISM manufacturing PMI and the final market manufacturing PMI for August are both coming out. They're both expected to stay around their current very high levels, which should keep the dollar firm. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.